Money market funds are short-term, high-quality, low-risk, high-return investments of the nature of a financial asset. They do give investors capital preservation, passive income generation, high liquidity with competitive returns. 5 days ago, one of our subscribers, Mr. Jackson Michael, sent us a question via the comment section here. And through his question is asking us to do a video on ethical money market fund, and his main concern is the alpha return of 17%, which he considers huge, and is asking what are the risks involved, because probably and in his belief, the higher the return or percentage should match or correspond to a higher risk. Our immediate reply to him was, he keep an eye on the channel. And today, here we are. We have gathered fact sheets of the top 10 money market funds, and we have come up with the following in-depth analysis to answer this question and many others. To begin with, we have to bring to perspective what was the market interest rate with respect to CBK, Treasury bills, the 91 Treasury bill, the 182-day Treasury bill, and 364-day Treasury bill, where the 364-day Treasury bill had a market interest rate of 16.8130 because central bank figures are always shown in 4 decimal places. This is a schedule of the interest rates with respect to the Treasury bills. We shall be looking at the in-depth analysis of the fact sheets with respect to the 10 top money market funds after 3-second short break. So don't go away, give a thumbs up to this video and engage us in the comment section. Welcome to our today's episode. Welcome back, and thank you for your shares, your subscription, and your thumbs up. We shall first relook at the Treasury bill market interest rate with respect to the 91-day Treasury bill that had a rate of 15.7463%. The 182-day Treasury bill had a 16.6157%, and the 364-day Treasury bill garnered 16.8230%. Majority or most, if not all money market funds, they normally promise a return that is based on the 91-day Treasury bill. They will not give you a rate that is below that. That is as per their fact sheets. Some, but very few, will benchmark their returns to you as an investor based on the 91-day Treasury bill rate plus 1%. Those are 100 basis points. As we shall be looking at the returns that were posted by the top 10 money market funds in the month of September, you'll realize that all the 10 money market funds did give you more than the 91-day Treasury bill interest rate. Don't forget that the 182-day Treasury bill had above 16% and the 364-day Treasury bill. But as per the promise in the fact sheet, we have said that these money market funds did promise you to give you a return that is above or benchmarked to the 91-day Treasury bill return. Only 2, as per this schedule, only 2 money market funds were benchmarked at the 91-day Treasury bill plus 1. One money market fund, as you shall realize, the Jubilee Money Market Fund, is benchmarked on the average bank deposit rate and not the 91-day Treasury bill interest rate. That is the only exceptional case out of the top 10 money market funds. This is a list of how the top 10 money market funds fared or performed. At the top of the chart was Saiton Money Market Fund, which posted an 18.26%, followed by Lofty Coban Money Market Fund at 18.21%. Those are the only two money market funds that posted an interest rate that is above 18%. Then followed closely by Ethica Money Market Fund, which posted, as Michael was asking, a 17.82%. And because Michael did ask a question regarding Ethica Money Market Fund and with regard to how much this fund posted, when I checked on the fact sheet, Ethica Money Market Fund fact sheet, Ethica Money Market Fund does commit or promise to give you a return that is benchmarked on the 91-day Treasury bill plus 1%. According to what we have just viewed before as the market interest rates for the Treasury bill rates, the 364-day Treasury bill posted a market interest rate of 16.8230. Ethica Money Market Fund has given you a return of 17.82%. If you compare those two, is that Ethica Money Market Fund did promise and delivered on its return. But basically, what should come into our mind is that in the recent past, in 2023, the regulator, who is the Capital Markets Authority, did give the fund managers an adjustment as to the instruments to which they can allocate our money as investors. And in this case, the regulator expanded the horizon for the investment by the fund managers. It commuted the highest maturity period from 12 months to 18 months. So a money market fund can invest into opportunities that mature in not more than 18 months as compared to the old requirement of 12 months. That consequently means that these fund managers can now comfortably invest in 364-day Treasury bills. The other fact that you need to consider is that the longer the maturity period, the higher the return. And therefore, when a fund manager, through their fact sheet, have committed to give you a return that is benchmarked with the 91-day Treasury bill, they can easily over-deliver. And that is one performance indicator when it comes to service delivery. You under-promise and you over-deliver in your performance, because in the market, people will choose where to put their money based on performance index. The 364-day Treasury bill with its 16.8230% as per September, and the Ethica Money Market Fund and Lofty, Kabang, and Saiton giving us a return that is way above that rate, is because the fund managers are now allowed to invest in instruments that mature in more than 1 year, as opposed to what was happening before when they were limited to a maximum of 1 year or 12 months. So I hope Mr. Michael is answered that it's not a question or it's not an attraction of risk, but it's a horizon of the opportunities that these fund managers have been allowed to invest. And as you realize as we continue is that these top 10 money market funds, they are the new kids in the block. These money market funds, I think the oldest, as per this schedule, the oldest money market fund came to existence in 2017. That is being very new in the market. And that also speaks to their portfolio. majority of them have a portfolio that is less than 7 billion or even 5 billion. And that means that these money market funds, the fund managers are able to rotate or turn over their portfolios quickly. And based on the fact that majority of this portfolio are invested in the government securities, it's easier to turn over or perform portfolio rotations, and that means that they are able to respond adequately to changes in the market interest rates. For that reason, as you have observed, that on average, the performance of the Treasury bills and bonds, they have been positing high interest rates, and for that reason, there is no reason why your fund manager, in this case the top 10, cannot give you such good returns, owing to their newness in the market and their young portfolios, making it possible to rotate or turn over their portfolios quickly, and the fact that their benchmark instruments are the 91 Treasury bills, and owing to the fact that they have been allowed to invest in instruments that mature in more than 1 year, it's easy for these market fund managers to invest in the 364 Treasury bills that give a higher return compared to the 91-day Treasury bills, and also they can also take up bonds that mature early, so long as they do not go beyond 1.5 years. Another thing that you need to consider when you are choosing your money market fund is a question of the management fee and other fees, other charges that relate to that investment. And as per this schedule, column 1 or column 3, after the money fund name, we have the entry fees, and you note that all these all these investment money market funds, none charges an entry fee, and that also speaks to redemption fees. There are no redemption. Redemption means when you are buying back when you are withdrawing your money from the money market fund, there are no charges. For the management fees, you will notice that this time around, all money market funds have posted a management fee of the maximum allowed, that is 2%. As per the regulator, the fund manager should not charge you more than 2% as the management fee. But don't forget that the management fees are also subject to taxation. That is a cost that is rarely talked about when we come to analysis of money market fund investments. All returns from investments are subject to, some are subject to exercise duty, and others are subject to VAT. And in this case, management fees are subject to VAT, and that's why you notice that for purposes of transparency, I noted that NABO Africa and Jubilee have posted cumulatively the total amounts that came up to 2.25% and 2.26% respectively, and that one would also depend. That will also depend or vary from one fund manager to another. So it's very important you are there or you check on that one. But owing to the fact that they are all charging a 2% as management fee, that does not become a primary concern when you are choosing your fund. Only one money market fund is charging a ledger fee. Ledger fees are commonly found with money market funds that are domiciled with the banks. With respect to this one, Saiton Money Market Fund charges you 50 shillings ledger fee per month. So you can note that if you have saved a volume that has of a certain amount of money and you are returned, the 50 shillings is a ledger fee that will be posted in your or debited in your account. Initial investments amounts, you will note that Saiton requires a minimum of 1,000 That is also with the lofty carbon. But Ethica again has posted the lowest entry amount of 100 shillings. So that one speaks volume towards the reason why Ethica Money Market Fund has been posting the fastest growth rate in 2024. This fund allows you to join or an entry level that is not only attractive but inclusive. I don't think there is anyone who cannot afford that minimum entry amount of 100 shillings. Then we have Kuza. Kuza requires a minimum entry amount of 5,000 together with Jubilee Money Market Fund. Gen Africa 500,000 and Nabo Africa 100,000. I know that Nabo in the past Nabo required you to have a minimum of $1 million, but this amount they have consequently reduced to 100,000. The minimum top-ups allowed, that is Saiton for Saiton, Lofty Carbon and Ethica Money Market Funds are 100 shillings. Then for Kuza is 1,000. We did not get any viable information through their fact sheets when it comes to Avocap Money Market Fund. And that's why you note that we have left Avocap Money Market Fund, all the entries are 0 except one that gave us when this money market fund was created and registered, that is this year, May 2024. And I believe that is the reason why we could not get much information with regard to Avocap Money Market Fund. The same with Gen Africa. We did not get sufficient reliable information with regard to its top-ups. But for Jubilee, the top-up is 1,000. So generally, up to that point, you note that Ethica Money Market Fund again has maintained the minimum top-up and the entry amount are the same. When you look at the starting dates for these money market funds, you will note that the oldest came in to be in 2017, and the youngest Avocap started this year in 2024. So generally, these money market funds, the top 10, they are all new in the market. They are all very new in the market. And that's one of the key reasons why the top 10 are able to give us alpha returns compared to the rest. You remember that we have a total of 39 registered money market funds. And we are analyzing the top 10 out of those 39. So the other 29 money market funds, which are positing way less returns compared to these 10, where out of these 10, the lowest, which is Sanlam Money Market Fund, was posting 15.74, which amount is close. It's just the same as what the 91-day Treasury bill is posting, and that's a good return. So the rest 29 money market funds we are giving returns that are way below what the 91-day Treasury bill is giving, and that is the benchmark, the main benchmark for the return for many money market funds compounding. The total amount of income that you get from these money market funds is a subject of the rate of return, the amount that you are putting in that account, and the frequency. Frequency is the number of times interest shall be calculated and credited in your account. That is compounding. Compounding is accelerated by the frequency. So money market funds that compound your money on a daily basis, they give you high frequency and your money grows faster in those funds as compared to the ones that accrue your money on a daily basis but compound it on a monthly basis. Because for a daily basis compounding, it means you have a frequency of 365 times, while for monthly compounding you have a frequency of 12 times. Assuming these two people are putting equal amounts of money in their money market funds periodically, then it means the guy who is investing in a money market fund that compounds on a daily basis, they shall grow their money faster compared to the one in a money market fund that compounds their money on a monthly basis. And therefore, recommendation, go for one that compounds your money on a daily basis. And out of the top 10, we only have 3 money market funds that are compounding your money on a daily basis. That is Ethica Money Market Funds. We have Cyton and Nabo Capital. If you analyze the 3, out of the 3, Nabo becomes the third because the benchmark rate for the first 2, that is Ethica Money Market Fund and Cyton Money Market Funds, they benchmark on the same 91-day Treasury bill, but they give you 1% extra compared to Nabo. The entry level, the minimum entry amount for the top 2 now, that is Nabo, not Nabo, that is Cyton and Ethica. Ethica becomes number 1 because Ethica has a lower entry amount and top up, compounding daily. Then the other important aspect is general public perception, reputation. The reputation, when you compare these top 2, that is Cyton and Ethica, Cyton has a cloud of reputation that is not very sweet. It has refused to go away as much as they are doing so much to liquidate and pay back their investors. But I don't want to delve a lot with that cloud because I do not have a good advocate. I don't have an advocate. But Ethica Money Market Fund takes the day with the lowest entry amount and top up, with high benchmark rate of the 91-day Treasury bill plus 1 and compounds on a daily basis. Lastly but not the least, we look at the last schedule, where the last schedule gives you the allocation. This schedule gives you the allocation, asset allocation. Where do these money market funds put our money? Where do they invest our money? Because that one also speaks to some level of risk. And remember, as we had looked earlier on in a previous video on how you are going to lose your money in a money market fund, we squarely rested the bigger blame on the investor who can, through errors of omission and commission, allow unauthorized access to their fund. But generally, we can also suffer losses during fund investment. So when you want to gauge how exposed that fund is, you look at the asset allocation. Where does the fund manager put your money or invest your money? And that is what I've given you in this schedule. So when we look at that allocation, Cyton Money Market Fund puts or invests a 43% of its fund into fixed deposits. This is what they are lending banks, mainly banks. 43.7. Lofty Carbon does, and 90% of its money is invested in bank deposits. Ethica Capital gives 39% of its investment towards bank deposits. Kuza is investing 47%. Arvocapo, as we had earlier indicated, we did not get much in the reliable information about it. Gen Africa does for 55% towards bank deposits. Then we have Jubilee investing 25% of its fund in bank deposits. Nabo Africa has used quite some financial term, and it has grouped all its cash and cash equivalents investments into one basket, which assumes 86.8%. And that includes the fixed deposits, government securities, cash and call and cash deposits into one group together with collective investment schemes. When you look at the second column, that is government securities, Citon invests 17% of its fund into government securities. Those are treasury bills. Ethica Capital is investing at whooping 57% in government securities. Kuza is investing 26%, Africa 44%, and Jubilee 46%. Those two asset classes assume mainly the largest portion of money market funds, or the largest portion of the fund, and they bear the lowest risk. Actually, investments in fixed deposits and government securities are the ones that mainly gauge the risk level of that fund. So looking at it is that Citon has a total of 60% of its fund sitting in fixed deposits and government securities. Lofty Carbon has 90. Ethica has 96% of its fund sits with the government securities and fixed deposits. We have 73%, which when it comes to Kuza, Africa has 99%. Africa, its entire portfolio, its entire fund is divided into fixed deposits, government securities, and at that point, that does not raise other questions, because at least the regulator requires you to spread. Not more than 25% should be sitting in one, but at times, as you are readjust to meet that regulation, it can happen. Then we have Jubilee with the 71%. So ideally is to say that comparing and with consideration of what we had mentioned is that Ethica Capital again comes up with a really balanced, a really low risk portfolio, and Africa and the rest. Because if you look at the rest of the asset classes, that is cash and call deposits, collective investment schemes, do not bear huge percentage. But over consideration should be the last column, where we have the commercial papers and unlisted securities. That is the proportion that is being invested in commercial papers, corporate bonds. You are investing in local companies. You will note that Citon doesn't invest in commercial papers or unlisted securities. Lofty Carbon does 9%, Ethica 1%. We have Kuza with 18%. Then Nabo Capital has 13%, and lastly Jubilee has 11%. That is a column that carries much of the risk when it speaks towards fund asset classification. But remember, for money market funds, these are well negotiated investments. But because we have seen some money market funds go under, considering their March losses that they assume in the event the amount that they have invested in commercial papers, corporate bonds, are defaulted. So basically that outlines the asset classes. We have also looked at the fact sheets for the top 10 money market funds. Thank you for your time, and thank you for watching.